Hi there, Tricia here, and I wanted to go over the two trades that I took today. I use two trade setups, one off a longer tick chart and one off a smaller tick chart, requiring confirmation on three charts and all of my indicators before taking entry. It just gives higher odds trades. Very conservative way of trading. It's my way of trading, not right for everybody, but it works for me. You can go to www.easyemintrade.com and check those out. When you do order the ebook for $49.95, I will also send you all the files for TradeStation, eSignal, as well as my workspace and also my page, so everything will already be set up for you. You don't have to input all of your indicators. And I also will give you the links for NinjaTrader for the indicators as well. If you don't have any of those three platforms for your charting, the indicators are pretty standard, and I do give all the information and inputs and so forth, so you will be able to use these setups with whatever charting software or trading platform you are using. I did want to point out that it is really a good habit to get into checking the economic calendar every day, or at least once a week, setting yourself up for the whole week, knowing what is coming up. This is a link for the economic calendar, and when you go there, usually things of relevance will have a red star next to them. So like, for example, tomorrow at 2:15, the FOMC meeting. It is a good idea usually not to trade around that announcement. If you want to trade in the morning, usually you can do that, but usually you want to give yourself plenty of time, like say after lunch or so forth, and just wait for the announcement, because you have huge swings up and down until, well after the announcement. So just wait till things calm down in the afternoon if you do plan on trading in the afternoon. In the morning, just be wary of, what time the announcement is. Also, I'd like to point out that you should be trading the H contract now. So the ESH8, if you're, H9 if you're trading eSignal, and ESH09 if you're trading TradeStation. So just don't forget to change to the next contract. This is a scalp trade that set up about 10:20, a little bit before 10:20, and I passed on it, and I wanted to show you why. We have everything going the way that we want it. We've got our scalp indicator occurring, we've got divergence on our indicator, but when looking at all of our other indicators, our tick is in positive readings, so we would pass on a short. Now this is the smaller tick chart, and the reason why we were looking for shorts is because on our longer tick chart, price is below both moving averages, so we are not going to take any longs. We're going to take shorts until we get above both those moving averages. So that's why this scalp was passed on. This is a scalp that I took at about a little bit before 10:45. Excuse me. We have our scalp setting up. You'd like to get in under this bar here where this first arrow is. I got actually filled with a market order on the next bar at 869.75, and I always use an initial stop of 2 points, which would be 871.75. Got a little nervous here. It came to 871.25, was thinking maybe I might get stopped out, but luckily I didn't. So I used my trail stop method and used, just changed my stop as we keep getting new pivots. So this was the last pivot here, right where my arrow is, where I'm circling here with my pointer, and I got stopped out over here for a gain of 250. Now if you're exiting in increments, then you would have had a better gain than that, but this is based on trading one contract just using the trail stop method. Now where the red arrow is, right here under this bar, it's not a scalp trade, but it's a trade that's setting up on our longer tick chart, and if you wanted to, you could have taken that. We're just in the overbought area, so you could have just hit a market order after this bar here. You would have got filled on this bar probably somewhere, and using the trail stop method, using pivots, keep changing your stop obviously as the price moves down. This would have been your final pivot right here where I'm circling, and you would have got stopped out on this bar here, and depending on where you got filled on this red bar here, you would have had a half point gain or a 1 point gain. Just really depends on where you got filled. I did not take that because I was just finishing this trade here. I usually like to wait about 5 minutes or so before taking another trade, but that's just me. You don't have to do that. This is another scalp that was setting up at about 12:31, and I wanted to point this out because that's why you want to look at all of your indicators. Here we have divergence. I like that. That's great. We have our scalp trade set up here, and we could have got in and it would have worked. However, on our trending indicator on our minute chart, our smaller minute chart, we're not trending, so I pass, because yes, this did come down and it would have worked out actually really great, but it could have just as easily not worked out. So it's always easy to look back at something and say, oh well, that would have worked, but you don't have you just don't have the benefit of seeing all this when you're entering a trade, because obviously you're right here. You have no idea what is going to happen, because this is all you're seeing is from here to the left, so just as easily could bounce up. So again, I pass. This is a trade that I took at just about 1 o'clock. Scalp trade setting up. We have our divergence on our indicator. Would like to get in under this bar, got filled out over here on this bar, and I've been using market orders because it just seems lately the market is moving so fast that by the time I figure out where I want to get in right under this bar, I'm already down here already. So when I see my setup occurring down here, once it turns blue, I just hit market. I just hit a market order. When I see all my other indicators are in alignment, I already know that. As I'm watching these red dots appear, I'm just waiting for a blue one to appear, already knowing that my trending indicator is where I want it to be, my tick indicator is where I want it to be. Everything on our checklist is in alignment, and so all I have to do is just hit a market order and get filled. So that's what I've been doing, and I use a basket order with an order sends order. So as soon as I hit my market order for entry, right off the bat, my stop is placed and 2 exits are placed for me as well. So that just takes a little bit of practice. If you're trading one contract, still would do the same thing. Would hit a market order to get in, and then have your stop and your exit, automatically placed at the same time. If you have the capability of order sends order. So anyway, this is the pivot that I used. Obviously, here was a pivot when I got down here, and the price was down here. I moved my stop to here, so I got stopped out over here at 862.50 for a gain of 3 3/4. So I was fine with that. Now I want to show divergence. You can see here that here we have a higher high than here. But when we look at our price action, the price action here actually came to a higher high than over here. So what that is telling me that price is not going to go higher. It's usually going to follow your indicator here. So that's usually a good sign, because here we made a higher high, but the indicator failed to come up to a higher high, or at least an equal high to where we just came from. So usually that is a good indicator that we are going to go lower. So there are many different ways that you can play divergence. That's how I play it. So that's what works for me. So today I had 2 scalp trades, one for a gain of 2.5 and one for a gain of 3 3/4 for a total gain of 6 1/4. So I hope all this information is helpful, and I will see you tomorrow.